1 year ago, the government declared the biggest tariff war in a century. Last month, the Supreme Court said it was illegal. The refunds are going back to the importers, not to you. And the average household already paid for it. Here's the scorecard after the fact.
Here's what most people got wrong about Liberation Day. They watched the headline and missed the trade. Tariffs don't destroy value. They move it. From importers to domestic producers. From global supply chains to domestic capacity. From countries that sell to us cheaply to countries that agree to sell on our terms. The S&P crashed on Liberation Day. Most people saw a disaster. The investors who understood where the margin was moving saw a clearance sale. By July, the S&P hit new highs. The tariff year didn't produce a collapse. It produced the biggest sector rotation in a decade. If you were in the wrong sectors, you felt it. If you were in the right ones, you made money. Here's the sector map. Steel first, the cleanest winner. Section 232, 50% tariffs on steel, aluminum, and copper. Alcoa surged, Nucor, Cleveland-Cliffs, U.S. Steel. Pricing power restored overnight. The Midwest premium hit $1.05 per pound. Domestic producers captured that as pure margin. The U.S. became the third largest steel-producing nation in the world in 2025. New plants going up in West Virginia, Arkansas, South Carolina. Protected domestic producers capture the premium that used to go to foreign competitors. That's the entire redistribution thesis. Steel proved it. Auto. Looks like a loser. It's more complicated. GM absorbed $3.1 billion in tariff costs. Ford warned of $2,500 added to EV sticker prices. That's real pain. But Toyota, Nissan, and Honda all announced U.S. production shifts. USMCA-compliant manufacturers avoided the worst exposure. GM CFO said in January 2026, they expect net tariff costs to be lower in 2026 than 2025. The sector priced in more pain than it's going to absorb. The reshoring is happening. The timeline is just longer than 1 year. Semiconductors, most volatile, still net positive. The semiconductor ETF fell 12% in Q1 2025, recovered 18% by July. AI demand overwhelmed the tariff headwind. TSMC announced $100 billion in U.S. investment, 3 Arizona fabrication plants, the largest single foreign direct investment in American history. The semi-play for 2026 isn't the chip companies. It's the supply chain servicing the build-out, construction, industrial equipment. AI data centers are now competing with aluminum smelters for electricity. Energy is the constrained input. Consumer staples and retail, the redistribution hurts here. Procter & Gamble raised prices on 25% of products. Dollar Tree, Walmart, Target, their value proposition is cheap imports. When import costs rise, there's no clean exit. Raise prices and lose the customer. Hold prices and lose the margin. The consumer staples ETF underperformed all year. Staples with China supply chains aren't defensive. Pharma is the next watch point. 200% tariffs threatened by mid to late 2026. Johnson & Johnson committed $55 billion to domestic plants. Dollar and gold, the macro consequence. The dollar index fell 9% in 2025, largest annual decline in a decade. Gold breached $3,300 per ounce. The Spider Gold ETF gained mid-teens. Central bank buying at record levels. When the currency backing global trade comes under question, assets outside that currency attract capital. Gold was the clean hedge. Bitcoin, the most complicated story, hit 126,000 in October 2025. Then, Liberation Day crashed risk assets. But BlackRock's Bitcoin ETF attracted $25 billion in net inflows. That's institutional accumulation through the drawdown, not retail panic buying. Bitcoin now moves with the NASDAQ more than gold. In a risk-off tariff environment, it sells. In a dollar weakness environment, it should rise. Southeast Asia. The winner, nobody covered.
Hey, real quick, I had something I thought of. While Washington debates refunds and dividend checks, the real estate cycle doesn't pause for the outcome. I built a course, actually a bundle of courses that tells you exactly where we are in that cycle right now, what to watch out for, what to move, and when to do it, so that you're positioned before the pressure arrives, not after. I don't know how long I'm going to keep it at this price. The link's down below. Get it now before the price goes up. Now let's get back to the video.
Vietnam exports to the U.S. up 40%, Taiwan up 61%. U.S. imports from China fell 27%. The supply chain didn't disappear, it rerouted. The deficit with China narrowed. The deficit with Vietnam and Taiwan hit records. The investor captured the reshoring dividend without the direct tariff exposure. Here's the forward map. New Section 301 investigations launched March 2026. 15 countries targeted. The administration is rebuilding tariff authority through a different legal door. Policy direction unchanged. Mechanism updated. China truce expires November 10. Both sides are talking. Neither has a complete resolution. The truce is holding. Pharma at 200% hasn't landed yet. When it does, it's the next liberation day for a sector that isn't fully positioned for it. The investor's checklist: long domestic steel and metals, long semiconductor supply chain and energy infrastructure, long Southeast Asian manufacturing exposure, long gold as the dollar hedge, cautious on consumer staples. Bitcoin's forward case needs two things: dollar weakness continuing and institutional accumulation not reversing. Both are in place. The tariff war rerouted. It didn't end. New legal authorities, new investigations, new targets. The margin redistribution continues regardless of which statute the administration uses. The investor who read Liberation Day as a redistribution event, not a political event, positioned correctly. Steel won. Staples got squeezed. Dollar weakened, gold rose. Southeast Asia absorbed the supply chain. Bitcoin broke both ways. That map doesn't expire when the policy changed. It updates. And the investor who reads the update before the market prices it in is exactly where they were on April 1st. One day early, holding the right positions, watching everyone else figure it out.